Cool. All right, let's jump into it. Where we at? It's 2:22 on where we at? Yeah, 2:22 on Sunday, the 11th of January, 2026. So first full week of the trading year down now. So and of course you kind of sort of think, oh, mate, maybe about this time of year it might be a little bit quiet. But certainly in terms of the news that is pumping out at the moment, it just seems to be non-stop. I mean, where do you even sort of put your sort of focus at the moment? Like from the geopolitical sort of side of things and that, you got obviously yeah, everybody's up to, well, you assume most people up to speed, but you got Venezuela happening, you got sort of Greenland happening, you got all this sort of more local interior US kind of stuff with that sort of that girl that got shot. But I mean, look, in terms of what how that'll affect the market, I don't think so much. Like, I mean, apparently it's down the road or in the vicinity of that George Floyd guy from years ago. And then of course, there's people going, oh, but maybe it'll kick off like that. But I don't think so. So I think the main focus for us at the moment is really Venezuela and Greenland. Greenland's probably a little bit more because Venezuela, not that the situation has been solved by any any means, but the band-aid's been ripped off. Now we just got to see what's underneath with it all. Got a fun analogy there, but Greenland's the kind of one at the moment where if you sort of look at the headlines of that, people are sort of talking about sort of like are they like obviously the US wants it and they want it at any cost and they sort of are they going to purchase it and then I literally just saw some headlines a few moments ago that they're drawing up plans to invade or something. Look, end of the day, it's I mean, you can never really sort of say exactly what's true, what's happening with all this kind of stuff. Like, I think there's 50,000 people in Greenland. The idea that they're going to invade, you know what I mean? And that's not 50,000 sort of like defense. I think that's like 50,000 like population. So, I mean, really all they have to do is just land. So, anyway, we'll see how this all sort of plays out. But with the point that's interesting with all this sort of stuff going on at the moment is that all this sort of news and data sort of going bang, 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 you would think would keep this sort of idea of uncertainty still alive. And how is that applicable? It's like, well, that's obviously probably sort of metals, gold related to keep things on the bid as well. We were all supposed to have that tariff ruling on Friday. Well, technically Saturday morning, 2 a.m. Got to the point and they said, nah, look, we're not going to give you any sort of ruling. So I think that has been now pushed to potentially Wednesday. But I did also see reports of that it could sort of be Monday, Tuesday, or Wednesday. So again, the market's just waiting on edge for that. Gold copped a little bit of a bid into the end of the week. All these things combined, but particularly because of the idea that they were waiting to see are we going to get a ruling on whether the tariffs are legitimate or not. And the fact that we didn't get the ruling kind of goes more into the camp of uncertainty, and uncertainty is what sort of is keeping gold bid at the moment. So, quite a recovery week for gold because it was getting slapped this time last week. We had sort of quite a sort of solid little sell down, but really, I'll get to the chart in the moment, but it really looks a little bit more like a consolidation, which at the moment, consolidation leads to continuation, means that there is a good chance that we see more potential upside and even potential sort of new all-time highs this week. Which saying things are going to see make all-time highs has kind of lost a little bit of its shine because these things are making all-time highs, if not every week, every second week. But yeah, we'll get to that in charts in a moment. Quick look over the data as to sort of what we got. We've got Bank Holiday in Japan. What do they got now? These guys always have fun ones. Coming of Age Day. Oh, interesting. Cool. Anyway, apparently bank holiday for a coming of age. You assume maybe coming of age is kind of like your bar mitzvahs kind of thing. Like when for people who are like 13 or something. I don't. They're obviously not working. So anyway, point is, yeah, we've got a bank holiday in Japan. That's fine. We've got a little bit of Aussie data coming out. Not really anything that's going to move the market. So Monday's going to be pretty quiet data front. And just at a quick glance, it looks like Tuesday's also going to be a little bit quiet as well. We've got Fed speaker in that 4:45 a.m. Okay. middle of the night. We're still getting the Fed heads sort of coming out. So the typical kind of ones sort of saying, oh, Mirren going, hey, we need to cut 100 base points. So I think maybe even 150 base points or something. I think I saw at one stage, which is obviously not going to happen. But yeah, so anyway, so yeah, Fed speakers coming. That's fine. Another Fed speaker. That's fine. Whatever. Boom. So Tuesday's looking pretty quiet as well. ADP weekly numbers. Now, this is a new thing, and so it's tentative here as well, which is interesting. I'll have to look a little bit more into that. So, Tuesday night, technically, if we do get these numbers out, this is a new change of this year, ADP. So, ADP are obviously the government numbers. They typically come out first week of the month, like the NFP. But now we're getting a sort of weekly update of these things as well. So I don't know if we do actually have some sort of previous numbers here. But yeah, not enough. I don't really sort of know enough to sort of comment on this at this stage, but it's just something to keep an eye on. US CPI. Okay, so Tuesday night, technically Wednesday morning, we got US CPI. This seems to have sort of leveled off a little bit here at the moment, so 2.7%. So we've sort of got up to 3 and it's coming down, and they're looking for it basically just to sort of stabilize month on month at 0.3, year on year at 2.7. Now, 2.7 is above what the target is, because 2% is the target, but it's not, it doesn't have a 3 in front of it. That's the first start. And it hasn't really been the sort of at the forefront of sort of what the Fed have been talking about in terms of the possible drivers and that at the moment. So jobs have been the talking point of the two mandates for a while. Obviously, we had a whole heap of jobs data out last week. It missed on the ADP. It missed on the JOLTS, which is the job openings. It missed on NFP. Now, all of these things should, given sort of what we've been seeing for the last couple of months, seen the dollar settle down, and it didn't. It actually had a pretty decent week and looks probably the strongest it's looked for a little while now. And that did. I'll get to it on the charts in a moment, but certainly, if the jobs is the thing that they're all looking at, or the Fed's looking at, and we're still getting that weak numbers, well, the market's not buying it. So if we sort of can combine inflation as not too much of an issue, then yeah, look, we're going to have to sort of see how things may move forward from here. So back at 1 second later. Yeah, we're going to have to see how things move forward from here. But certainly the fact that it's close but not at the target means that the job's not done. So they're not exactly sort of going to cut on that basis. Look, it is coming down, so let's just see how it's actually forecast. I didn't realize this in December. We had a big sort of drop off there. So yeah, look, anyway, the outcome of this is if we see a higher CPI, well, that supports the idea of more holding for now. They're not going to hike, but they may sort of hold. The argument, obviously, sort of with the jobs factor has been, okay, as I said, you've got these people like Mirren and that coming out saying we've got to cut, got to cut, got to cut. If inflation is coming down, that supports the idea that, yes, you could still see some cuts and you could still see things moving forward. If we have a look at the Fed pricing for, let me put this out. This is the Fed watch for what it's worth. We're seeing a 95% chance of a hold at their next sort of meeting, which is on the 28th here. Geez, that's going to be a big day because we also got RBA quarterly data coming out that day as well, I'm pretty sure. Let's get back to the data. Oof. So yes, if it's one to keep an eye on. Of course, CPI is generally what I call second tier data, about the same as the NFP typically, and it's something that can get quite a bit of a reaction. But if this comes in a bit hotter, I could see the dollar continue its path up. Even if it comes in a little bit cooler, I don't think that's necessarily going to be the thing that sort of smashes it down or past a knee-jerk reaction. So we'll have to see how this one sort of plays out. A couple more Fed speakers after that. On to Wednesday. Not a great deal. It's pretty quiet through Asia and Europe in that in terms of data sort of coming out this week. We got PPI, which is of course the producer price index. So that's kind of like one step up from the consumer. Basically, think about it. It's like the wholesalers and people that are buying stuff. If they're paying more for it all, then obviously you'd expect that may sort of filter down to the consumer eventually. But basically, we're seeing similar sort of stuff here. At least we're only sort of seeing the previous one. So the actually that's retail sales. Sorry, cool. We're not actually getting what were these previously. This is the star releases. Okay, so it's so the little star next to these things here. Release date shows 34 days after the government shut down. Two simultaneous releases as the source skipped the data last month. So I guess this is the last, hopefully the last little bit of this kind of like shutdown stuff, uh, like stuff up to the data kind of thing. We're missing a couple of months coming into the end of the year because of all that sort of like shutdown stuff. And so some of it we've filtered through and we've got one set, so then we can match one month against the next month. These ones obviously are just going to be that. That's why we haven't got any sort of previous numbers just kind of work off. But again, PPI, whether this is what the market's expecting, whether we know where it was, whether we know what the market's expecting. If this does come in a little bit higher, again, that's something that supports the US dollar there. Retail sales looking for a little bit of a jump up. I'm not sure if these are sort of adjusted for seasonal because obviously, retail sales in December, well, yeah, it's always going to be a little bit busier because we've got that sort of Christmas period as well. So that's also something, if it comes in a little bit hotter, supports the US dollar with those bits of data there. And obviously the reverse for these things as well. So if it comes in lighter, well, you got to play it out. What's happening if the retail sales come in lighter? Well, it's obviously people aren't out spending as much. Why aren't they spending as much? Because they're kind of obviously a little bit cautious. They don't have the extra money to spend. Maybe their money's all going towards servicing their mortgages or just sort of like their normal sort of day-to-day living kind of stuff with it all, but or they're just sort of saving and holding on to it because they're low confidence with it all. So if it does come in lower, it's obviously something that's not as positive for the US dollar. Um, cool. And then October data coming out. That's the other PPI stuff there as well. So we've got October. Yeah, that's just a big jumble of stuff here. So anyway, so yeah, so Tuesday, Wednesday is going to be a little bit busy in terms of the US data. After that, nothing really that's jumping out. Got inflation expectations on the Thursday for RBA, where we previously 4.5. So it is moving up a little bit here. We'll see how we go. See if this changes anything with that last print that we had, because obviously sort of we did come in a little bit lighter with the last CPI that we had this week as well. Was it this week? Yeah, it was this week. GDP over in UK, slowing down a little. Moving forward, unemployment claims for the week. Still, this is 2008 to 2010, 208 to 210,000, still on the more positive side at the moment. So I think, as I said a couple of times, I think once you get to about the 230s, the 240s definitely, but even sort of 235 plus, people start to sort of go, oh, that's not great. But certainly this is an acceptable level if we're sort of coming in the low 200s, given everything at the moment. We got manufacturing data. I think these are, I see the Philly one. What was it, these guys? I don't know. One or the other just jumps all the way around. As you can see, up to 18, -8, 10. So again, look, these things will sort of maybe get a bit of a knee-jerk reaction, but I wouldn't be sort of like going too crazy on sort of trading based just off that. And then quiet into the end of the week. So, yeah, a couple of bits of data, PPI and CPI, obviously the main sort of ones there, and then your typical sort of weekly data, which is now ADP and also unemployment claims. But in terms of Aussie as well, it's not really a great deal of data happening there. All right. Excuse me. All right, onto the charts. So start off with DXY here. So as you can see, it has broken out. And this is where we're at last week, and I sort of said, look, these were the levels we were looking for. It got slapped down on the Tuesday, if getting a lower time frame here. You can see that sort of like it's respecting the chart, and this is all I ever ask of the chart is just that it respects the levels. It's just when things get a little bit haywire and they just go out into the middle of nowhere, turn around from just arbitrary points. That's when I kind of sort of think it's a bit more emotional trading. And I'm not right. There's no real sort of structure to it, and that kind of stuff. It makes it very hard to sort of go, okay, where am I going to be taking profits? Where am I looking for my entries? These kind of bits and pieces. The fact that it came up and rejected right on this zone, to me sort of says, look, this is where the market was previously at, the sellers are at, for however way they wanted to value it. This is what they've done again. So it's playing out very well, in my opinion. Excuse me. We saw the same thing on the Monday, Tuesday here. The overextension of this sell down, though, I think, well, not even I think, it came off the back of the ISM numbers and the miss on that. And as I said sort of earlier, with the job data that we had out this week, ADP, which was on the Wednesday, so probably around this, where was it? I don't know, it was around this point here. ADP missed. Jolts was out around the same time. That also missed. And market just didn't care. Like, I had a little bit of a sell down, but just didn't care. And it sort of filters in. So you guys think the equation of how they're sort of going, okay, how are we going to value where we're going to take the US dollar? Well, jobs has been the big thing for a long time. So, if those numbers are coming in poor, which they did, that's every reason for the market just to have sold it straight back down over to here. But even with this new information, and you plug that into the equation, they're still buying it up. And you've got to ask yourself why and what's the underlying reason. Because obviously, jobs, as much as sort of like they have been the driver in the last couple of months, aren't the driver at the moment. And it's not to sort of say that sort of like, should we break some of these levels that we can't sort of come back down over here? But it just sort of, in terms of sort of like, the two things that they're looking at, which is obviously employment and also the inflation, they're with that equation, they're saying, hey, hold on, wait, let's still buy it up. So in terms of sort of where we could sort of go from here, I wouldn't be surprised if we do see a little bit of sort of consolidation through this sort of 98.80 down to 98.70s through this area, previous like we had seen here. Generally, you'll see with these charts, they'll kind of replicate each other. Sometimes it'll just shoot straight through, but if you've got a bit of chop zone through here, I could very much see some sort of chop coming through here, which would mean a little bit of sort of maybe weakness with the US dollar earlier in the week. However, should you break through this 99.2, call it 99.3 to be on the safe side of it all, then really you got to consider the idea that we're looking at 100, at 120, or 100.2, whatever. Excuse me, because that's the major breakout. That's where we're actually going to see things really move a lot more because we are more or less in a consolidation. Yes, we're going sideways, but you got to look at it in the sense of like, here were your buys, here were your buys. If this was a true consolidation and it was a true range, this sell down here really should have come down over here. I mean, obviously that's the range. Hit the bottom, hit the top, hit the bottom, hit the top, hit the bottom. No, for whatever reason, the market said, hey, let's move it up. So the buyers have actually progressed with the level in which they want to pay for it all. So now the break and the way that you use these sort of things is the break of the sort of structure, and it's the same for the for sort of like channels and all this stuff. I mean, this is a channel; it's just sideways. So the fact that it broke the structure, meaning it's pivoted before coming down to sort of test these lows, puts the emphasis back on 120 and is an early indicator of a potential break. So, let's just put an alert on there because that's a major breakout level. I mean, you're going to know as it happens, but major breakout. So there is work to be done, but as I said, if you look for these bits of data and say the CPI comes in hot, well, they're not looking at jobs obviously so much at the moment. That's not so much a part of the equation, and inflation starts to take the sort of the front, and also not only if it sort of the inflation takes the sort of the front lead in terms of sort of what they're talking about, and it's actually moving up. The argument for cuts and particularly massive cuts isn't really sort of there so much, which could be the narrative we see for these things to move up a little bit higher here as well, because we have really just been sideways for almost the better part of 6 months now. We did obviously get that big sell down as Trump started. We're consolidating the lows here now. There's a good chance that we do see a bit of a pop. I mean, look, there's a lot of work and there's a lot of levels in which we could see this thing sort of obviously sort of target and then obviously then fail and come back down there. But that's fine. You know, let's work with the here and now before we sort of get to you know what's going to be happening sort of with the US dollar overall and in 12 months time because we're traders, not investors. That's the whole point. Anyway, so what's actually sort of actionable? Look, this move does feel a little bit extended here. It is sort of hitting into a resistance zone. We are overbought. I could definitely see a little bit of weakness into the start of the week. But as I said, I wouldn't be surprised if we sort of maybe fill this wick down over here. And if not, then maybe possibly even sort of down to sort of 98.70. Yeah, 98.70. But I would say there's more likely the dollar's on a move at the moment. We've broken this channel. It does look like it wants to sort of go a little bit higher. We did see a reaction off this first swing high. You expect to see this reaction off this second level. Past that, these feel more like speed humps. I would say your target that you're looking at after that is 100 to 120. That you're probably going to get a larger move from though. Like again, I think this is going to go like this and then probably back down like that. I don't think we're going to get a big major breakout first time. But the thing is, you know, we did sort of test this. If you look at this way back here, you know, this is obviously coming down and defining it. First test, second test, third test, three tests going through, failed. Now the buyers have moved the pressure up. I think there's a good chance. Let's just make one of these ones here. We do see a potential move like this over the next couple of weeks. So I don't think we're necessarily going to be breaking out this week, but I certainly think that after some early weakness, if we see a rally effort, a second effort at 99.20, I expect that to move through, and then I pretty much am putting my emphasis towards 100 to a 120. As I said, with gold, metals have really just sort of ignored this dollar strength. They've kind of detached from it. They have for a while now. Where's the chart we were using? So, a couple of things with gold here. Probably having 8 charts of this stuff. This was the move that we were looking. What I was looking for, sort of. You know, I think this was the end of December. The weekly two videos ago, so 2 weeks ago on that, and I said, look, you know, got the breakout here. Expect a bit of a pullback. This is actually quite a heavy sort of pull down here. We've left a gap here, which is interesting because I'm not sure if this is necessarily going to get filled. At the moment, certainly looks like it wants to run away a little bit, and certainly maybe test out, at least sweep the tops of the highs over here. But we'll see how these things happen. Remember, we've also got that tariff decision to come, and if the tariffs are upheld, then that should continue a little bit of a bid on the dollar. If the tariffs are deemed, I guess, illegal, is that the right wording for it? Then there's a potential chance that we sort of see. Look, I can't actually say. I would say that that would maybe sort of give gold a little bit of a slap, but I really actually can't sort of say so much of it all. But I feel that's probably sort of the outcomes we're looking at. If they're upheld, I would say the dollar, sorry, that gold remains bid because remember gold was bid up on the tariffs. The tariffs being withheld kind of still falls into that camp. If you take away the potentials of the tariffs, so I guess it's not like they're going to give the $100 billion back, but it could mean that there's less drive for it there. I don't know. We'll see how that goes. It's just one of the many things that we do have sort of going on at the moment. So in terms of the chart, let's clear this up a little bit. So let's push back up past that 78. Let's get that off there. Let's get this off here. Have a look at what we could be looking at. So we did see a little bit of a rejection down as it did sort of first push up past this zone. But as I said, coming into the end of the week, put it back on the 1 hour, you can see that was pretty short lived. Like it rejected where we kind of sort of thought it would, rejected down. That's really just a retest to the top side of this sort of triangle. Also that previous kind of high that we had put in sort of earlier on like there was a little gap up onto Friday's open and then sold into. So it does feel, I don't know, it's hard to sort of get on the short side of this, but you can't see me doing the air quotes, but it's hard to get on the short side of this because obviously, you know, we're just a whisker off from all-time highs, but at the same time, it's hard to buy it. because it does feel like it's kind of like, it hits a new level and they're very happy to sell it down very quickly. And this is the kind of thing you got to be wary of, because this was a sell off here of what, that came down 5%, which, in the scheme of things isn't maybe necessarily a great deal, but that's also still, $250. $250. Wow, that's a big sell down there. So look, I wouldn't be surprised if we do get a test up around this sort of like, 45.30s to 45.50, this kind of area. But I'd be cautious in seeing a big explosion to the top side without a new catalyst. Maybe Greenland will be the catalyst. Maybe the tariff things will sort of be the tariff. Maybe it'll be a combination of them. But also, I think I heard he's talking about Trump's talking about Mexico or something now as well. So yeah, as I said, there's a lot of stuff going on there. But if you kind of sort of just take a step back and you kind of think, there's this. Well, this is probably why gold is still remaining bid, despite these heavy sort of like sell downs being at lofty all-time highs. So look, we'll see how we go. I think sort of put it this way, I think anything up into this area is probably worth a little shot at a short side move, but again, it's a risky game to be sort of shorting metals at the moment. The better sort of time to sort of probably trade this is to see if we see some sort of deeper correction, and then see if there's buy the dippers sort of come back into it all as well. So in terms of how this thing may move, yeah, look, I'd probably be sort of waiting to see how Monday opens up, see what happens up in this area. If we start to see some resistance again through this area, then sort of maybe look for some positions then. But it's at the moment breakout, back test, failed to make the higher high. That's fine. But if we have a look on the daily, daily clearly looks like it wants to try to break out a little bit there. Weekly unable to move. So look, even if this is going to go higher, maybe a little bit. This sounds like a very bad analysis, to be honest myself. It's just not clear cut. We've got a big negative divergence. We've got a consolidation. I would just be cautious buying this. I don't think this setup at the moment looks like it's about to explode out to the top. I think there's more chance of this consolidating a little bit more through this range here. Put it that way. Silver, strong week again. Technically a high weekly close if we have a look at this one here. But again, these kind of things, I'm not sure if I really trust this to be ready to break. This is forming a bit of a triangle. And, as we say, sort of consolidations favor the direction that it comes into. So consolidation will favor sort of continuation. However, it's just a matter of whether this is going to sort of break to all new highs this week. And this is the thing, you just got to wait for these sort of bits of data or these news headlines. If we see CPI coming in a little bit hotter and we see the dollar get bid, this is going to draw some capital away from metals, regardless of how much it's detached. The thing is, the dollar's at like, pretty extreme lows at the moment. So the value trade on the dollar is probably a better risk reward than buying metals at the absolute highs. So that's just something to keep in mind there as well. But silver certainly, very resilient, sort of bouncing back through this area here. Yeah, I would wait to sort of see what happens if this breaks out of this triangle. I think that's probably the safest sort of bet at the moment. Aussie, big slap back down off the back of the CPI. So we had this I covered this actually, sort of did a video sort of midweek. We had the CPI come in cooler, and then we got the knee-jerk reaction down, and then punched up, 60 points or so. And ever since then, just straight one-way traffic. It did halt a little bit coming into here, but again, you can see why. This is where you had your buyers. So you had buyers, and it is still holding here. So I think certainly 66.70 is the line in the sand, or 66.60, whatever, for Aussie to hold to stay in the game here. But you do have this negative divergence, which is on the daily. So this one here. So negative divergence on the daily. We do have a break of this channel and closed outside. At the moment, it's held. As I said, look, I wouldn't be surprised if we get some US dollar weakness early in the week, which could give us a little bit of a sort of wick up on Aussie. But I would still be cautious on buying Aussie here. It's been pretty strong and resilient, but once you take away the argument necessarily for hikes sooner rather than later, which I think the market was technically kind of pricing for two hikes, then that kind of takes a little bit of the sort of wind out of the sails of it. And then when you actually potentially see the dollar becoming a bit more of a viable option and the panic stations for RBA to hike aren't necessarily there, that to me says we could potentially see a little bit more downside here. So I won't be buying Aussie at this point. If we do get back up to maybe a body fill, if we can get back up to test, even just maybe sweep the high of these ones here around this sort of 67 to 67.10, and put in a top wick and then break the lows, then I think that's going to be an early indicator, and then confirmation obviously once we get down under that wick there. Underneath that weekly low at, what price is this? Let's just call it 66.60. Yeah, to me, it's I think this RSI is probably destined to sort of be coming down sort of sub 20, which in this kind of respect means that obviously even if we do have a little bit of a push up, I do think we're actually going to be driving down a little bit lower there. Cool. And look, I'll just finish off with China and that. Not really too much to be said about this. This just is, if anything else, it's just something to sort of show what can happen once these sort of long-term trends do break. It did fluff around for a little bit, but once it committed and you got that close down underneath that little sort of consolidation zone there, it has just been complete one-way traffic moving down over here. There is potential for this to become a little bit of a channel, so we could find some little bits of support here. Certainly if you do break through this falling resistance here, I could sort of see this sort of potentially coming back up to test 710. But in terms of sort of where it's going to go, like it's just hit the supports down here, those previous levels. It's actually taken out the lows and it's finding some support now. So look, I do think that potentially we could see this thing sort of at least consolidate these levels down here for a bit. If not, see potentially a little bit of a push up over here as well. This is going to put a little bit of pressure on the Aussie. It's also just going to be an indicator of obviously a bit of US dollar strength. Inversely to that, should we see this thing just go boom and drop out the bottom? Well, 685 is kind of like the next major level that you'll probably be looking at. But typically when you see these bottoms like this, if you flip the chart around, so it's better for some people, that's a hanging man. Same thing if it's just down on the other side. So I wouldn't be surprised. A little bit of US dollar weakness would put down a bottom wick here, and then we take out here. So I'm going to say put it above that weekly wick highs. I think that's going to be a sort of bounce, which is effectively, I mean, look at how tight that is. You just call it 7 basically. But above 7, I could see this thing sort of rally up a little bit more.